It was a sweltering July afternoon in 2018 when I placed my first trade. With sweaty palms and a pounding heart, I clicked buy on a stock that I was sure would skyrocket. Instead, I watched in horror as its value plummeted over the next few days. This was my baptism by fire into the emotional rollercoaster of stock market trading. Over the years, I've learned to manage my emotions through trial, error, and a few well-honed strategies. Here's how I did it. 1. Developing a solid trading plan. After my initial foray into the stock market, I quickly realized that trading without a plan was like sailing without a compass. I was driven by impulse and emotion, buying high out of excitement and selling low out of fear. Determined to change, I spent months educating myself, reading books like Trading for a Living, and attending webinars. I learned about the importance of having a trading plan, one that included specific entry and exit points, risk management rules, and clear objectives. Creating my plan was a game changer. I outlined my goals. These were modest but consistent returns, strict criteria for buying and selling, and a firm stop-loss strategy to limit my losses. With this plan, I felt more grounded and less swayed by the market's ups and downs. For instance, when a stock hit my predetermined stop-loss, I sold it without hesitation, even if a part of me wanted to hold on, hoping for a rebound. This discipline saved me from significant losses and reinforced the importance of sticking to my plan. 2. Practicing mindfulness and stress management. Despite having a solid plan, the stress of trading was still overwhelming. The constant market fluctuations triggered anxiety and affected my daily life. I knew I needed to find ways to manage this stress, so I turned to mindfulness and stress management techniques. I began meditating every morning for 10 minutes, focusing on my breath and clearing my mind. This practice helped me start the day with a sense of calm and clarity. During the trading day, if I felt overwhelmed, I would take a break, step away from my computer, and do some deep breathing exercises. This simple act of pausing and breathing helped me reset and approach the market with a clear head. I also made physical activity a regular part of my routine. Running became my go-to stress reliever. After a hectic trading session, I would go for a run to clear my mind and release built-up tension. These practices not only improved my mental health but also enhanced my trading performance by allowing me to stay calm and focused. 3. Limiting exposure to market news. In the early days, I was a news junkie, constantly glued to financial news channels and websites. Every headline seemed like it could make or break my portfolio. However, this constant bombardment of information only heightened my anxiety and led to impulsive trading decisions. I knew I had to change my approach. I decided to limit my exposure to market news. Instead of checking news sites and social media constantly, I set specific times to catch up on the news. Once in the morning and once in the evening. This helped me stay informed without being overwhelmed by the noise. I also filtered the information, focusing only on news that directly impacted my investments and ignoring sensational headlines designed to provoke emotional reactions. By controlling my media consumption, I reduced my anxiety and made more rational trading decisions. I learned that staying informed didn't mean being inundated with information. It meant being selective and strategic about what I consumed. 4. Using automated trading tools. As I gained more experience, I discovered the benefits of automated trading tools. These tools could execute trades based on predefined criteria, removing the emotional aspect of decision-making. I decided to give it a try. I set up my trading software to automatically execute trades when certain conditions were met. For example, if a stock reached my target price, the software would sell it without me having to intervene. This automation was liberating. It allowed me to stick to my plan and avoid the temptation to make emotional decisions in the heat of the moment. One memorable instance was during a particularly volatile market period. A stock I owned reached its target price, but the market was so turbulent that I might have hesitated to sell, hoping for an even higher price. However, my trading software executed the sale exactly as planned, locking in my profits and preventing potential losses. This experience reinforced my trust in automated tools and their ability to keep my emotions in check. 5. Keeping a trading journal. Reflecting on my trades was another strategy that helped me manage my emotions. I started keeping a trading journal where I documented every trade, including the rationale behind it, the outcome, and my emotional state at the time. The act of writing down my thoughts and feelings provided clarity and helped me identify patterns in my behavior. For instance, I noticed that I often made impulsive trades after a string of losses, driven by a desire to win back my money. Recognizing this pattern allowed me to address it and develop strategies to prevent it. Regularly reviewing my journal entries helped me learn from my mistakes and improve my trading strategy. It also served as a reminder of my successes, boosting my confidence and reinforcing positive behaviors. By turning my trading experiences into learning opportunities, I became more self-aware and better equipped to handle the emotional challenges of trading. 6. Setting realistic expectations. In the beginning, my expectations were sky-high. I dreamed of making quick profits and becoming a successful trader overnight. However, this unrealistic mindset only led to disappointment and emotional turmoil. I realized that I needed to adjust my expectations and adopt a more patient and long-term perspective. I set realistic, achievable goals, focusing on steady, incremental progress rather than immediate gains. I accepted that losses were a part of trading and that success wouldn't come overnight. This shift in mindset helped me stay grounded and maintain a balanced perspective. One of the most significant changes was embracing the concept of risk management. Instead of putting all my money into high-risk trades, I diversified my portfolio and only risked a small percentage of my capital on any single trade. This approach reduced my anxiety and allowed me to weather losses without feeling devastated. Over the years, these 6 strategies have transformed my approach to trading. They have helped me manage my emotions, make rational decisions, and achieve consistent success in the stock market. Trading is inherently emotional, but with the right strategies and mindset, it's possible to navigate the highs and lows with confidence and resilience. My journey has been one of continuous learning and growth, and I am grateful for the lessons I've learned along the way. Today, I am not only a more successful trader but also a more balanced and emotionally resilient individual. Thanks for watching. Please like, comment or share this video and subscribe to this channel about personal finance and investing.